Time for the MF Corner on markets at lunch. It's the first trading day of a new month, so let's take stock of how May has been for large cap funds. While the category may have done slightly better than the Sensex, Dhirendra Kumars, CEO of Value Research, is here with the analysis of the performance of the top fund and the laggard. Afternoon, Dhirendra. BNP Paribas Equity is the best performing fund for the large cap category in the month of May. What's behind this performance, and would you recommend this to investors?
First and foremost, I would like to give the rider that 1 month performance in the life of equity mutual fund is not very relevant, but yes, it reflects some prevailing behavior or the character of the portfolio. And here at BNP Paribas Equity, this is entirely because nearly a quarter of the fund invested in healthcare and FMCG. That has actually insulated it from the big decline. Not that it has not lost. It has lost 4%, about 4%, which is nearly half of the category average, and nearly half of the Sensex in this month.
The Reliance Quant Fund is the worst performing fund for the month. It is a quant fund, but what went wrong? I mean, this fund has usually performed in line with the category.
Yes, whatever long-term numbers we see, it is there. The number precisely matches with the category average. But here is a quant fund which is often very concentrated, and nearly 70–80% of the portfolio in top 10–11 holdings, and that I think leads to this wild performance. This fund is generally on a month-on-month basis, either at the top or at the bottom, and it has generally been on the top. And right now it's at the bottom. I think the concentration actually takes its toll, and we see this wild gyration, this wild movement.
Okay, Dhirendra, let's also take in some viewer queries. The first query is from Manoj Kumar, and I think his query is what many investors would be having as well. He wants to invest about 1,000 rupees a month for a period of 5 years and wants very high growth on this investment. He does not mind taking huge risks as well. What fund would you suggest?
First, I would just like to warn him that he must understand, he must comprehend the risk which he is going to assume, and more so, it's more of a psychological. At this point, I don't think anybody investing with a 5-year view is assuming great risk. But when you see your investment, when you make an investment and when you see it going down in value by 10–15% in a month or two, it's very upsetting. For him, I would suggest that he should seriously consider a small and mid-cap fund. And if I have to suggest some, I would say IDFC Premier Equity, SBI Emerging Business, Magnum Emerging Businesses, or ICICI Pru Discovery. But again, a warning that these are true risky propositions, and he must withstand. He must stay on course with his investment through the time.
Dhirendra, second query today is from Tejas Shah. He says that he understands that SEBI has abolished entry charges for mutual funds, but he wishes to know whether trail commissions is paid by AMCs, and does the investor get the benefits of the same, and also are the exit load charges paid to the distributor eventually?
No, trail commission is paid by the AMC. And investors don't have to do anything, and you don't stand to benefit if you invest directly, or that if no trail is paid on the money you have invested, as an investor you don't stand to benefit. And the exit load which is charged to the fund, it might be most fund companies after the abolition of entry load pay some entry commission, some sales commission. And exit load primarily up to 1% goes towards is recovered by the AMC, which is basically money spent before money spent already by way of sales commission.
Okay, Dhirendra, we'll leave it at that. Thank you so much for joining us.